again, you can't change a company that you don't own.
Right.
Right. So we think that's a great tool that we have that we'd love to drive change for Canadian companies to see Canadian companies thrive.
Welcome back to Money Talks Life Lessons, where life's too big for just numbers. I'm Joanne Caben.
And I'm Melissa McGuire.
Today we're diving into a topic that's growing rapidly across Canada, and especially here on Vancouver Island: socially responsible investing. It's about making sure your investments reflect your financial goals and personal values.
To help us explore this today, we are joined by Landon Folz from NEI Investments, a leader in a responsible investing space. Landon, thanks for joining us.
Yeah, thanks for having me. Good to be here.
Awesome. So before we dive into the details, can you share a little bit more about yourself and what you do with NEI?
Sure. So I have been with NEI for the last 6 years. I've been in the industry for the last 18 years. And I joined NEI because I really like the unique process that NEI has of making money and making a difference. So I work with advisors across BC. I meet with investors and clients and try to educate them on what we're doing at NEI, some of the investments that we're making, and help advisors in building their models and portfolios for clients.
Okay, let's start big picture. So if we think broadly, socially responsible investing used to be seen sort of as a niche market, but now it feels like it's everywhere. So for those that are new to the idea, what exactly is socially responsible investing?
Yeah, well, that's a good question. I mean, starting at the basics, I really think at its core, responsible investing or socially responsible investing is investing with a purpose, investing for the long term in a way that is sustainable for the future. Some might call it making money while making a difference. For some people, it's aligning your values with your investment. It means a lot of things to different people, and there is a lot of depth to it. The term ESG also comes up, and so that's environmental, social, and governance. And that's a framework for looking at responsible investing, but it's really multifaceted. It's not super simple. It takes a lot of work, a lot of commitment. We have a lot of tools that we employ with socially responsible investing or responsible investing, things like corporate engagement, talking with companies about what they're doing. ESG analysis, or looking at a company's performance beyond financial performance. We have things like impact investing, or measuring a company's actual impact or an investment's actual impact. And even proxy voting. So as investors, we can vote on behalf of all the shareholders on what a company is doing. So there's a lot of tools that we can use as responsible investors, but it is growing, like you said, and that shift has been happening and is well underway.
Yeah, I like what you mentioned there about the engagement piece that your company does, and something resonated with me a lot, and I know we share this with clients, is that you actually shared a story with us years ago about Amazon and how NEI engaged with Amazon based on that packaging, right? So a lot of us will remember that white, styrofoamy, plasticky feeling texture of those Amazon parcels. And NEI actually did engage with Amazon, correct, to kind of change the packaging going forward. So that's why we actually have that more biodegradable packaging we see today. Is that correct?
Yeah, that was part of an engagement that NEI was a part of, where you went from styrofoam to these air pillows, actually. And the air pillows were a better solution at the time, but they are single-use plastics and not always curbside recyclable. So along with a number of other investors, we were part of a shareholder engagement where we talked with Amazon about their packaging, what that might look like. And these sort of things take time, but Amazon eventually transitioned towards paper-based packaging in its boxes. The boxes are still a little bit, sometimes a little bit big, but they're getting better. And we found that it was, number one, it cost less than the plastic packages. It was easier to pack. There were no more breakages of the package of the goods, and it was curbside recyclable. So really a win-win for all areas of the business: the environment, the staff, and the end consumer. So,
Right.
Yeah.
And I think from a consumer standpoint, like, we're getting this a lot now, where so many people don't just want to make money the same way they might have in the past, right? They actually want to have something tangible or have the money or have their investments align with their values and say, okay, well, if I'm going to invest in this company, what is that going to mean for the environment? And, I feel like because we just, the nature of where we live in BC, Vancouver Island, there seems to be a lot more talk about that. And so this is why it's really exciting to have you today, because we can kind of unpack some of the questions and the things that our clients can think about when they're making investment decisions.
No, agreed.
So how has socially responsible investing evolved in Canada over the past few years? Like, what have you seen?
Well, NEI has been doing responsible investing for many years, since the 80s. So NEI actually stands for Northwest Ethical Investments. So one of the first responsible investors in Canada. But over the last, I would say 5 to 10 years, it's really grown exponentially. You've seen institutional investors adopting it before individual investors like yourself and myself and families. But now it's really grown to continued growth with institutional investors. Now individual investors are wanting to do that. Younger, older, business owners, high net worth individuals, you name it, it's growing in a big way. We see a lot more options for investors in that way too. It's not just a niche subset where you can't get proper diversification or it's a limited investment set. There are broad investment solutions for it. And the assets continue to grow. The demand continues to grow, and we see more and more people having these conversations with their advisors on what that might look like. So it's really exciting.
Yeah. I remember back in the day, it was people just didn't believe, like we would tell people, you have the option to make a difference. And people would be like, no, I can't, not with something this big. Like, it's not like me alone doesn't, like I can't impact anything. And over the years, we've seen this huge shift where people have an absolute belief that their one choice can make an enormous impact. And now we have a place for them to be able to do that sort of stuff. So it's really incredible to see just the impact that people can have, and we're seeing day to day now compared to the non-belief before.
A quote that I heard along the way that really resonated with me was that we're excited about progress rather than perfection.
Yes.
And seeing things move forward, big or small, it's really encouraging. They're never going to be perfect, right? But the work you can do to do things in your community or what your portfolio might look like or where you allocate your time or your money can be a contributor to seeing that progress continue. Another interesting stat that I will share is that we see 76% of investors saying that they would be interested in discussing these options with their advisors. That's a big number. To me, that's
huge.
That's big. That's not just a small subset. Now, is their whole portfolio going to be in that area? Perhaps not. But they want to know people want to know what options they have. So the conversations are happening more and more, and it's really great to see people having those conversations around what that might look like.
So, Lana, you just mentioned that I think the number was 72% of people, based on your survey, are wanting to know more about socially responsible investing. What other factors contribute to this demand, do you think?
We're seeing a lot of institutions also going towards this direction. So looking at universities, foundations, endowments, nonprofits, those investors are also looking for ways to manage risk, and they think responsible investing is a way to identify risk or ESG analysis. So that's another area that is growing.
Can you allude on that for me? Because to me, like maybe this is from when I first started, right, 15 years ago. And clients might have a similar initial mindset as me, is that socially responsible investing, I actually used to think that was more risky, so to speak, right? Because, there was a lot of new, like verbatim and maybe news coverage that said, well, if you're going to be socially investing, you might, the returns aren't going to be there. You're going to be paying higher fees. And I know we're going to go into this a lot more in the future, but how would investing that way reduce risk and maybe help address, those people who might be thinking, well, is socially investing more risky than not? Like, that type of thing.
No, it's a way for investors to really see risks that aren't on the financial statement. And we all, as investors, look towards things like balance sheets, income statements, dividends, free cash flow, ROE, you know, all the
Yeah.
financial metrics that we, you know, grew up studying and looking at. We're finding today that a lot of the value of a company is actually hard to link directly to those financial metrics.
Interesting.
Things like a brand's value, how loyal the customers are, how happy the staff are, what the safety and health standards look like within the company, what their environmental footprint might look like. So using these tools of what we'll call ESG is a way to identify risks and opportunities for a company. So we're seeing that really important to institutional investors and retail investors alike for a variety of reasons.
And because it's becoming more on companies' radars, like a lot more companies are trying to become a little bit more green.
Sure.
And therefore, you know, there's probably more options when it comes to, you know, portfolio managers looking at the different corporations that meet these metrics, would you say?
Yeah, I think businesses really are looking at what these areas might look like for them, because a well-managed business will look at these areas and will often see positive kind of business outcomes as a result. So companies that are leaders in that way or are looking at those sort of areas often have increased top-line growth. Many of them might have lower operating costs. So McKinsey actually shows that operating profits can affect as much as 60% of a business, and companies with stronger ESG practices are less likely to face penalties, lawsuits, et cetera. So that's a consideration. Better lending conditions sometimes,
Right.
Improved financial performance and competitive advantages. You know, a study showed that highly engaged employees can increase productivity by 18% within a company.
Right.
So if you have companies employees that are very happy with their working environment, they're going to stay there, they're going to grow, and you're going to see the company be successful as a result. But how do you measure that on a financial statement?
Right. So as that notion of that the company's not going to do better because they're focusing on socially responsible investing, it's kind of saying, well, that's actually not the case because people are happier, the companies are thriving, and they're going to have more brand loyalty because of it.
Definitely.
That's what I think of when I think of risk. Not so much of risk in the market or risk of just being in sort of the ESG sort of market. I think of accidental risk from investing in a company that you don't know about and can then sort of, if I want to use the word besmirch, you know, whatever it is that you're searching for as part of your value. Like, let's say you're a big company doing something, and you really have a strong belief in whatever it is that you have a strong belief in, and you're accidentally investing in a company that is totally against that, but you haven't been able to see it because, as you say, that's the difficult stuff to follow and find. So when I think about the ability for like a company like NEI to look at risk, that's what I think of, that they can look at that stuff that we don't see immediately.
Sure.
That's huge. Yeah. So now that we're kind of understanding a little bit about the why of what would make this attractive to people, maybe we should talk a little bit about how you actually do it at NEI.
Sure.
There's a lot. Like a lot of people, when they think about ESG, they think about, you know, what everybody sort of knows about is the exclusionary screenings. So what are the main approaches, like when we think of ESG integration? So negative screening, exclusionary screening, positive screening, impact investing. Like, can you run through some of those for us?
Yeah, definitely.
It's a big list. But.
It is. There's a lot of nuances to it. It's not just an easy check a box sort of thing. And I think the industry is realizing that. So corporate engagement or talking with companies, you know, voting our proxies on behalf of investors for certain issues that are happening at the company, policy work or changing at a broad level how a whole industry might operate. Take the mining industry, for example, right? You know, there's a lot of work done there at a higher, even higher than the corporate level, but a policy level that can impact a number of different companies. Or let's say the retail industry, how the places that you shop at are sourcing their goods, right? So you can often influence change by influencing maybe the largest player, say an Amazon, for example. But you can also do it from an entire industry level. So that's another way. ESG analysis is another way. Impact investing, where we're measuring the actual tangible difference of the companies that we're investing in. Yeah, there's numerous ways that you can look at it.
So like often when we're looking at companies and we're researching some of the reports on there, we're going to look at some of the things like, does this company have human rights violations, right? Like what's going on from that? I know they talk about like CEO compensation is a big topic that comes up. You know, how much are these CEOs spending, and is that trickling down to the places it needs to trickle down to, right? So these are some of the things that, you know, NEI would be screening for when they're looking to engage in companies, right? And trying to figure out which companies are being transparent.
Yeah, no, definitely. Let's break it down, right?
Yeah.
ESG, environmental, social, and governance. So some environmental issues might be things like climate, things like water. You know, we're seeing the water topic come up a lot more as there's increased water demand in water-stressed areas. And the AI boom is only exacerbating that, right? So those are a couple areas for environment. Social, those might be things like your digital rights and cybersecurity. Or labor practices, health and safety. These are things that people don't often think about, but they're really important to a company's well-being. Or governance issues, things like business ethics, board diversity. You mentioned CEO compensation, right? So, so these are all areas that we would look at. In some cases, it requires a very specific company analysis of some of these issues. In some ways, we will exclude certain industries. Tobacco would be one.
Right.
And controversial industries where there is a lot of risk inherently built into that. But we are seeing it make a shift towards more individual company-based analysis. For example, you might not want to exclude all clothing companies, but you might want to exclude a company that has really poor labor practices that are employing, slave labor, for example, right? And so if you can't engage and make change in that area, you might wish to exclude that company from the portfolio altogether. So
I like that part. If you can't engage and make change, that's one of the cool things I find about ESG investing now is the engage and make change part. It's not just about excluding, it's trying first. And if it doesn't work, well, then it's not going to meet the metrics, but it's cool that everybody tries first.
Definitely. Exclusion is, it's almost the last resort, if you will. I mean, as we said, change or making progress towards a better future for everyone is much more effective than necessarily just divesting of everything.
Right.
This makes me think of the huge debate in Canada right now with oil and gas and transitioning to a different energy source, right? Because when you say exclusion, it's not possible for us to just reduce oil and gas at this point, because so many of us, we still are driving, gas consuming vehicles. We still need to heat our homes, but yet we're trying to make a change towards a different type of energy, right? But it's not going to happen overnight. So we can't just exclude it and still go on the same day to day that we all want to, right? Because we all have certain lifestyle things that we like to do. So it's pretty great to see that there are companies that are willing to engage in these type of conversations and say, okay, well, how, can we continue to keep the lights on, but make progress to change? So it's pretty cool that there's a company out there that is really looking at this. I know there's other investment firms, but I feel like you guys by far do it really, really well, like a really good job of it.
Yeah, I think it comes back to that idea of making progress. And these things take time, they take commitment, they take expertise. So important that people are looking at that.
So in terms of, what NEI does for like time, progress, commitments and stuff, how do they apply those types of approaches to building the funds?
Yeah, there's a lot of approaches that are made throughout the funds. So some of the funds will exclude certain industries. Some of the funds will be more impact focused. Some of the strategies, well, they would all include corporate engagement. That'd be across the board. But yeah, there's a wide variety of ways to approach it, and it depends on the strategy that you'd be looking at. So that's worth having a conversation about.
Okay.
Just to help our listeners kind of pull all of this together, can you share some real world examples that brings kind of all of the approaches we've talked about to life?
Yeah, definitely. Happy to share some examples. There are so many, sometimes it's hard to know where to start, but let's start with maybe some environmental examples.
Yeah, that'd be great.
So the global population is expected to surpass 10 billion people by 2050. That obviously puts a lot of strain on our resources. So we are investing in energy efficiency companies energy efficient buildings, different sort of things that can help reduce the output of 10 billion people. So an example of that would be Train Technologies or Carrier Global. Combined since 2020, Carrier Global's products have avoided nearly the energy use of nearly 48 million US households. So they're helping be a lot more efficient in the heating and the cooling of households and also businesses. We're seeing that continue to grow with AI and that. So water, we see global demand from population growth putting a lot of stress on water, as we spoke about earlier. So there are huge opportunities for companies addressing water infrastructure, transportation, testing, treatment, monitoring, everything to do with the water supply chain. And Xylem and Pentair would be a couple of examples of companies that we invest in that are focused on water and water sustainability. So another one that we all would know every week, we put out the garbage and the recycling.
My husband does, I don't, just so you know.
It's my job as well. So
I make the kids do it.
Good for you. Good for you. So we invest in Waste Management and Republic Services, leaders in the waste and recycling business. Waste Management in 2021 recycled over 15 million tons of materials and are a real leader in that space. So I think we see that from our own household's perspective, but it's neat to extrapolate that and see what sort of businesses are really leading in that area. You know, I take my son to the Recycle Depot as well and get him to help, and now it's just a part of what we do, right? So
can we talk a little bit about, so you're talking about some real world examples. One of the things that really struck me when we were looking at actually different funds that you have available is that you often can say, yeah, we're making a difference. This is great. But how do we actually know if we're putting our money into this investment that it is actually filtering through somewhere, right? You know, we kind of just put it out there, we have faith. But I know from a lot of NEI, they actually do these things called like impact reports that actually show, for example, on the topic of water, how much water you're bringing to a community, right? So I think this is a really great feature that people should know about because if you're curious on what actually is happening with your money, NEI has these resources available, right?
Yeah, we are very transparent in what we do. I think you should know as an investor what your money is doing. So a couple ways that we report, we have a responsible investment policy that we put out every year, so you can know what areas we're focusing on, what topics we're really looking at with companies. We have an impact report that also comes out annually that quantifies how much water was treated and saved, or how much energy was provided from renewable sources, or how many people got access to financing that didn't have it before, or people treated with healthcare. A number of different metrics or KPIs that we look at that we want to see those improving, and those are very intentional investments. So we do that. I think having a report like that really helps to eliminate fears of greenwashing, because you could say you do one thing, but you have to prove it, right? We also release responsible investing report annually that goes through all of our corporate engagements, how we did on all of our proxy voting, what sort of change happened. So it's very thorough, and I encourage anyone who's interested to really go through that to see the depth and the actual impact that's happening from the investments.
So I love that you just mentioned greenwashing, because this segues perfectly into our next area that we want to talk about, which is all about kind of the myths or the preconceived notions that we all have when it comes to socially responsible investing. I alluded to it earlier on when I was talking about risk. So I think it would be really good for us to kind of really just lay it all on the table and talk about some of these questions that a lot of our clients and we might have had before knowing more.
So I guess the biggest one, when we think about sort of myths that we can debunk here, does responsible investing mean lower returns?
So I would say no. Other factors play into investments return. Maybe that might be the sector or the area that it's investing in, or the process. A value fund, for example, might underperform in a year where growth is high. But the fact of looking at a sustainable versus let's call it a traditional investment, there is research showing that integrating environmental, social, and governance factors does not mean sacrificing returns. NYU actually put a paper together that took 1,000 studies and looked at different funds in different categories and compared them. And what they found was the returns are comparable. A 2024 study of professional Canadian investors showed that 77% consider ESG factors to mitigate risk. And we're also seeing that a lot of these funds have better downside protection in a down market or in a choppy market. So that's another thing that it does. But it is probably something that comes up a lot, but it doesn't mean you have to sacrifice returns to invest responsibly. I think the data is out there. If you look at it, there are many investment opportunities and options, and very strong and compelling returns associated with them.
Yeah, I'm going to go off the cuff and ask what I think a lot of our clients are also going to want to know. Does it cost me more to do this?
No, that's another good question. And I mean, let's look at the numbers. I think there is a study from Morningstar. So Morningstar is the kind of main managed solution analyst in Canada. And what Morningstar has found is that the costs are actually comparable. They're virtually the same. And you might have some that are less expensive and some that are the same, maybe some that are more, but as a whole, on average, they're the same as traditional investments. I think the reason for that is because the data has become so much more widely available. It's not a little niche company that's doing this anymore. Companies have economies of scale, and the largest investment and asset managers in the world are doing responsible investing. And so, that research is out there, and it doesn't necessarily cost you anymore to do that now, which is really exciting.
Perfect.
Okay, we mentioned this a few times already, but one of the biggest concerns is greenwashing. Greenwashing is such a huge term of, just sort of pretending that you're, paying attention, or pretending that you're actually following the environmental, social governance rules, and that it's all just sort of marketing instead. So how do investors know, I guess, that they're truly making an impact, sort of beyond our impact reports and such that NEI can provide?
Sure. I would say that you, as an investor or your advisor, have to look under the hood. Really, that's the biggest thing. If we took everything at face value that was presented to us, we'd probably wish we didn't. We need to look deeper into many things, and responsible investing is the same way. So, so I think it's important to understand the strategy that you're investing in, or your advisor to understand the strategy, have done the due diligence to look at what, first of all, the methodology might be, to look at what the philosophy is, the investment strategy and the responsible investment strategy, and then to assess the expertise. Usually you want to go with someone very experienced, someone's size, scale, expertise. So it's not just a new thing for them, right? And then continually monitor it, right? So look at the reports, look at what are the holdings, look at what it's been doing, and assess that as an ongoing basis.
For our clients, is there any questions you would recommend somebody? So let's just assume they're going into a meeting and they want to know more about their socially responsible investing options, right? What are some key questions that they should ask their advisor to maybe make sure they're getting that proper answer and that they are doing their due diligence of looking under the hood?
I think, like you said, first of all, just ask your advisor. It all starts with that. So a lot of people are nervous to bring up the topic or ask about it, but it all starts with a conversation, right? So ask your advisor, if you already have an advisor, what options are available to us within our portfolio, if you're not doing that. If you do have responsible investment strategies, what companies are we holding? What are some of the processes? How is it done? What do the costs look like? All these sort of things that you'd want to know. And just asking if it's something that you can incorporate into the plan. Like, really, it's an investment vehicle, like anything that needs to fulfill both your investment objective, your financial plan, and your values and non-financial sort of goals and objectives, priorities. And I think just asking, how are we doing on this, is a good question, and check in on that every year or every review. It's all about the conversation. It's all about being open, having that trusted relationship, your advisor knowing what's important to you. And having this kind of non-concessionary approach of great returns that meet your financial goals, along with something that you feel is something that you want, where you want to be allocating your money.
Yeah.
I mean, we do the same with where we buy things, right? We decide where we want to buy things.
Yeah.
Same as with your investments. So, and I would say be open to feedback from your advisor because they have more experience on that. I mean, you have seen many cases where someone might say, I want everything in this, and that might not be the best case for the financial plan. So you, given your experience, what level to incorporate that, but having those conversations is super important.
Along that vein is sort of the thought of diversification. If we exclude certain industries, are clients missing out or losing out?
That's a good question. As we talked about earlier, responsible investing has evolved, so you have so many industries covered. It's growing all the time. And so I think you have strategies that can cover every asset class, from energy to technology to materials. It's all covered with responsible investing. And some people say, is this an ESG company? That's often a misnomer that we hear. And every company is an ESG company. Some just might be good and some might be not good, right? So we are looking at all the companies. You have very broad investment strategies, core investment strategies, not niche sort of specialty sort of things, but companies that are highly profitable, companies that are in companies across a wide variety of sectors. And I don't think you have to sacrifice diversification. There are every company covered in the universe by responsible investment strategies. So I think you can build a well-diversified portfolio through a 100% responsible investment strategy, or have a sleeve of that within your model as well. There's a lot of different approaches.
One of my favorite conversations to have with our clients is when we might look at the holdings in maybe we might look at the holdings in an NEI investment, and they'll pick out one and they'll be like, oh my gosh, that's in there. I'm like, oh, it is. And let me tell you why. And it's the best conversation where you might see something that isn't inherently thought of something that would follow any sort of ESG protocol. And then you could be like, oh, but guess what they're doing? And guess how NEI is working with them to do this. And it's quite a fun conversation. Just to sort of link back to our impact and how everything is sort of changing around the world when we ask it to change, if we can. So it's part of the best part of showing the holdings is being able to explain what I know about the individual holdings.
Definitely. Yeah, no, that's a neat way of looking at it. Again, you can't change a company that you don't own.
Right.
So we think that's a great tool that we have that we'd love to drive change for Canadian companies to see Canadian companies thrive, right? And that's something that we're doing every day.
I'm just going to say, I feel like I'm going to say this in meetings. You can't change a company you don't own.
That's our new tagline.
Yeah, that's good. You cannot change a company you can't own. Love that. Could you tell us a little bit more about the fee structure of these funds?
Yeah. So Morningstar Canada, they came out with a report in 2024 that highlighted that sustainable funds actually charge lower fees than their conventional peers in most channels.
Really?
Yeah, I think that surprises a lot of people. Perhaps it's because a lot of these funds have come out in the last 10 years when, fees have kind of come lower, and as a result, they're being launched at a lower price point. But they're very competitive from a fee perspective. But anecdotally, beyond that, what I've seen is that people who do have an ROI aspect of their portfolio and know the companies, like you're saying there, Melissa, about what we're doing with the companies and the change that's happening, they feel a real buy-in towards the long-term future of that company. What that in turn does is helps them to have a longer-term mindset on investing. And what we all know about investing is the longer-term focused you are, the better you do. You're not going to go sell a company because it had a bad quarter. You're going to see it through. So we find that it keeps people from making short-term decisions on their investment that are usually harmful, and focusing more on the big picture because they know the companies, they know the good things that are happening, and their portfolios thrive as a result.
I love that.
Me too.
Because that's exactly what we strive to do with retirement plans, right? We want people to buy into their futures so they'll be willing to weather what we know in life happens, the road bumps along the way, right? So that's exactly like what you guys are doing as well. So
we've talked about the here and the now. Let's talk about the future of responsible investing. What trends are you seeing now in Canada and globally, especially now?
From investment perspective, we're seeing a lot more diversification. Not all of your assets necessarily being in the US. So people are investing more within Canada. People are looking globally. People are diversifying in different ways to their portfolios. They're making sure that they are covered off in all of the different areas. We see continued growth in responsible investing in Canada. Like I said earlier, from the pensions, whether it's CPP or individual investors or anyone for that matter, are continuing to look at this as an important area of investing, not just a nice to have, but a must have. I think it's becoming the standard in a lot of ways. We are seeing more scrutiny on reporting. So to the greenwashing point earlier, I think you can't just label something as responsible and not have anything to back it up. So I think the standard of transparency is going to be higher, which we would say is probably for the better for consumers. And I think increased conversations, as people learn more, become more empowered, they're more knowledgeable. And investors today are more knowledgeable than ever before.
Yes.
Right? So,
That's
so those
fantastic.
conversations are happening, and it's exciting to have because we see a lot of wealth actually is shifting today too, right? And we're seeing younger investors looking for responsible investing strategies. We see a big part of this wealth transfer actually that's happening is set to see many dollars transferred to millennials, to women, to different areas, and that's going to prompt a lot of conversations. We're seeing older clients asking about responsible investing and how their values might align, and high net worth individuals too. So I think the growth is continuing, and more conversations around the area for sure.
So how does regulations and shareholder activism fit into all of this? Is this helping?
So the shareholder engagement is actually really important today, and I think it's one of the key areas to influence change. So you're seeing more of the asset managers are taking an approach to that. So at NEI, we would do that, talking to companies, and then the investment managers that we work with as well would also be talking with the companies. So it's happening more and more. Companies are, they're feeling like this is something that's important to investors, so they are listening. And I think that continues to be a big driver of progress, big contributor to change, is by having people being more active in their investments. So I think it's positive.
Back to that tagline. You can't change a company that you don't own.
Correct.
We're going to say that forever. Do you see responsible investing becoming the standard rather than the exception?
I would say in many ways it already has. You just look at the adoption of the ESG analysis by companies, and that is used by a very high percentage of asset managers around the world, whether they call themselves a responsible investor or not. So that has become mainstream. As I mentioned with millennials, you almost don't even have to bring up, would you like this in your portfolio? Given an option of a responsible investment and let's call it a traditional investment, both with the same performance, we see people will choose the responsible investment all the time. Why would you not want the added benefit on top of the financial return of doing some good in the world? So I think it continues to grow. Of course, things in the world never go up on a straight line, and in the US, we have seen a bit of a bump and a pullback kind of in the last couple of years with responsible investing. In Canada, it continues to grow. Assets are at record highs. But I do see it as being adopted as a standard in many ways. But the depth to which we go at NEI, I don't know if everyone would adopt that. That does take a lot of expertise, time, and that. So, but we're getting there, and we're seeing more people doing it, asset managers, investors, which is encouraging and exciting.
Well, this has been such a valuable conversation today, and I feel like more and more people are wanting to align money with their values, and it's great to be able to debunk the fact that they don't have to give up returns or pay more to do so.
Or lose out by doing so.
Yeah, exactly.
So, Landon, before we wrap up, do you have any final thoughts or anything that you'd like to sort of chat about that we haven't covered yet?
Yeah, hopefully this gets people thinking about maybe some questions that they might like to have in their next meeting, maybe taking a look at legacy, taking a look at what's important for you, taking a look at the future, and maybe just zooming out a little bit. We get so caught up in the short-term day-to-day of our lives, looking at what are our big picture values. Think about those and maybe ask some questions on your next portfolio review and look at some ways that you might be able to explore that. I would say just at the end of the day, it's so important just continue to have that conversation with your advisor about what does the future look like for the portfolio? What are we doing? And so yeah, ask good questions and and keep exploring that more if that's important to you.
Perfect. So Landon, thanks for joining us and sharing NEI's perspective. This really has been super. We really appreciate your time. For listeners who'd like to learn more about NEI, where should they go?
Check out our website, NEIinvestments.com. Talk with you about any questions they might have, and just that'd be a great place to start.
We'll put all the details in the show notes as well, so everyone will be able to find you.
Great.
Thanks so much again.
Yeah, thanks, John. Thanks, Melissa. Appreciate it.
We hope you enjoyed our episode, and thank you for listening to Money Talks Life Listens. You can check us out on Spotify, YouTube, or at our website, islewealth.ca. Bye for now.
Corporate disclaimer. This podcast has been prepared by and with expressed opinions of Joanne Cabin and Melissa McGuire, and are not necessarily the opinions of Raymond James Ltd., RJL. Statistics, data, and other information presented are from sources RJL believes to be reliable, but their accuracy cannot be guaranteed. This podcast is for informational purposes only and should not be construed as an offer or solicitation for the sale or purchase of securities. Investors considering any investment should consult their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making an investment decision. Past performance is no guarantee of future results. Information provided in this podcast is general in nature and should not be construed as providing legal, accounting, and/or tax advice. Should viewers have any specific questions and/or issues in these areas, please consult a legal, tax, and/or accounting advisor. RJL is a member of the Canadian Investor Protection Fund. Raymond James USA Ltd. advisors may only conduct business with residents of the states and/or jurisdictions in which they are properly registered. Raymond James USA Limited is a member of FINRA and SIPC. We hope you enjoyed the podcast, and for more information, please visit islewealth.ca.